Hello traders, and welcome to lesson 19 of the ReadFX Beginners Forex course. In this lesson then, we're going to explain news events. So there are two basic types of news events. We have scheduled and unscheduled. Now, scheduled news events are data that's released by various governments and organisations at a set interval or period. These events are published in advance on what's called the economic calendar. So let's have a look at some examples. Okay, so here we are on a website called DailyFX, and I really like the calendar that this website has. It's very, very good. You can look at previous days, you can look at days in advance, and you can also go way back in history, and you can see that it's marking the events on each day, and we can check any day we want, which is very, very good for back testing. Now, onto the events themselves then. You can filter by importance, low, medium or high. I normally don't bother with low importance news because it tends not to have an effect on the market. But later on in this video, we're going to look at the effect that news actually has. You can also select by countries and regions depending on the instruments that you're trading. Now, one thing I want to point out is the US dollar. Okay, so the US dollar will move pretty much all markets. So even if you trade a pair that doesn't have the US dollar in it, the US dollar news will probably still move that instrument. And the reason being is that things like oil and gas and a lot of commodities are all priced in US dollars. So any fluctuation in the dollar will move all currencies and all instruments because pretty much everyone uses gas and oil and the things that are priced in dollars. Okay then, let's have a look at an example of some news. So we can see this is news that affects the United Kingdom, and this is average earnings for the last 3 months. Now, what we see here is 3 sets of numbers, okay? So we have the previous, and if I just click on this, it will expand, and we can see some historical data, and we can see that the previous one was 8.5%, okay, which is this figure here. Now, the forecast, this is their prediction of what this data will be. So they forecast that this time around it was going to be 8.3%, and we can see that this event happened at 7 a.m. this morning, and we now know the actual result. We have a slight difference between the two. Now, with news, the bigger the difference, the bigger the effect on the market potentially, okay? And the reason that they're graded as low, medium and high, so this is the ability or the potential of this news event to move the market. So this has medium potential, is what it's essentially saying, for moving the market if this data is quite far, if the actual is far from the expected. So in this case, it's 0.2%, which is not massive, and this likely caused a little bit of a move in the market. Now, red news or high impact news has much more potential to move the market, and we can see this is flashing now because this news is literally just happening. So the previous, if we look, minus 8.9, forecast minus 8, and we got an actual of 2.3. okay, so there's a huge difference here. So this has likely just caused quite a big move, or right now as we speak is causing a big move in the market. So this is examples of scheduled news events. Unscheduled news events then are not planned in advance or not known about in advance, and examples include things like terrorist attacks, natural disasters, wars and invasions, and things like COVID. Now, a really good example is the Russian invasion. Now, clearly, Russia planned and knew about this in advance, but nobody else did, and the market certainly didn't. And what we can see here is a chart on TradingView, and this is the Russian ruble versus the US dollar. Now, if we look pre-invasion, we can see lots of tiny little movements. The swings are very small, and this is sort of your normal market volatility. Then if we look at the invasion period, we can see that the swings are absolutely enormous. Look at this one here. So it's now, the market is now moving more in a single day than it moved in a period of several months. And this is the power of unscheduled news. It's the shock factor. Nobody saw it coming, and in the case of this invasion, nobody knew what was going to happen next. So this causes a lot of fear and anxiety. People pull a lot of money out of the markets, and therefore we get these wild swings, okay? So that's unscheduled news. Now what I want to do now is go to the charts and show you the effect that news has on your daily trading. Okay, so here we are on a 1 hour chart of the pound US dollar. And if you look at the bottom, you can see these little circles with flags in them. So what this is doing is TradingView is showing red news events on the dollar and the pound, because this is the pound US dollar. So it's showing the two relevant currencies and the news. And what I want to do, if I just change this arrow to a cross, if I just line this up with the candle, and what you'll see is that these large candles tend to coincide perfectly with the news announcement or with the hours that follow the news announcement. So here's a good example. So here's a news announcement on the pound, and if we follow this up, okay, we can see we've got this little indecision candle followed immediately by this huge bear candle. If we look at this US dollar example, I mean, this is pretty plain to see. We get a series of very, very big bearish candles. And if we look what was happening previous, you can see the normal range, okay, the normal amount of volatility in the market, lots of small sort of wicky candles. And then when news happens, we change from these small candles into these large bearish candles, and they're very directional. There's not a great deal of indecision. It's very clear which way the market wants to go, and this is the effect of news. Now what you can do as a little exercise, if you want, is work your way back through the chart and have a look at each news event, and what you'll see is that each one of the large candles on the chart will generally coincide with a red or a medium news event. Okay, if you want to see what the news events are, you simply click and you'll be able to see the relevant events that happened at that time, and sometimes there are multiple events scheduled for the same time. Stuff like inflation and non-farm payroll. Non-farm payroll is everyone's favorite event to trade, so you'll almost certainly get a reaction. In fact, if we look at the non-farm payroll, if I just press Control and scroll my mouse wheel, so this event here is non-farm payroll, and if we just look at the size of the reaction we get, look at the candles just prior to it, okay, and then look at the news. And this is also a perfect example of 100% retracement. News events like non-farm payroll, okay, tend to retrace 100%. So if you get this huge drop, you will usually get either immediately or within the next day 100% retracement of that move, okay? So that's pretty much what's happened here. So how do we go about planning for these events? Well, if you don't set these little markers on your trading view, and you can do this by right clicking and going to settings and then economic events on chart, you can tick this box and it will show you only the future events, the ones that haven't happened. If you want to backtest, untick it, and then it will show the previous ones like I have. Now what I also like to do is put a vertical line, Alt-V, on the chart. So if you imagine I'm trading this day and I can see this huge red line on my chart, and I am aware that I'm getting closer and closer to this news event. Now why would I want to do that? Well, because I need to change my settings, okay? If I'm trading with a stop loss, I know that the market is about to become more volatile, okay? So the first thing I might want to do is change my settings. I might want to widen or shorten my stop loss. I might want to avoid this news entirely. So if I'm in an open trade, I might want to make a decision somewhere around here whether or not I'm going to cut that trade or whether or not I'm going to hold it. So news awareness and news avoidance is very, very important. You should start every day by looking at the economic calendar, making a note of the events that are going to happen, and then marking them on your chart, okay? If there are multiple events, then what I will do is I will literally draw the lines on my chart where these events are going to happen, and I will actively plan my trades around them if I'm trying to avoid them. Okay, so one more thing I want to show you is a news event sort of close up in detail. What I've now done is drop down to a 1 minute chart, and immediately you can see this huge candle in the middle of the chart. Now this is the actual moment that NFP is released. So this is the 1 minute candle when the news actually broke. And there's a couple of things I want to point out. The first thing I want to point out is if we look to the left, is look how flat the market was prior to this news event. So this is what I call a waiting market. Nothing is really happening. All of these candles are absolutely tiny, and we're trading in a very, very tight range. Now that's because nobody wants to commit to a direction, because the whole market knows that NFP is coming at half one. So they know that this is likely going to be the driving force behind the daily candle. In other words, whichever way this goes, it's probably going to set a direction for the day. So why put a load of money into the market when you don't yet know the direction? And that's what you see. This is likely just transactions happening in the market rather than people actually speculating. So right on the half one, we get this huge candle. Now the second thing I want to point out is the power of news. So if I measure the size of this candle, and you can see that it's about 62 pips. Now, the daily ATR, average true range, of the pound US dollar is typically 100 pips. So on an average day, the pound US dollar will move about 100 pips, and in 1 minute, it moved 62. Okay, so 60% of its daily ATR in a single minute. So that is the power of news, and this is why you need to be aware of it. If you were previously trading with a 10 pip stop loss, there's a very good chance that your stop could have been jumped by this move, because this will happen so quickly. It could easily jump a 10 pip stop, okay, and you could end up losing a lot more than you planned for. So this is why you need to be very aware of news. You need to plan for it in advance. You need to mark it on your charts, and you need to change and alter your settings to be able to survive it. One last thing that I want to point out about news is that the importance, or the relevance rather, of news shifts over time. So here we can see some inflation data that's being released. Now, in the current climate, inflation data is the one that everyone is watching. They know that governments are going to have to respond if inflation stays high. They're going to have to raise interest rates. Okay, so anything to do with inflation or interest rates at the moment is having a huge effect on the markets. People are watching the data. But if you went back pre-COVID, what you'll see is that when inflation was low, it wasn't an issue. Inflation data came out and nobody really cared, because inflation was, in the UK anyway, typically around 2%, which is average. Now that inflation is at 10%, everyone is glued to the charts every time inflation data comes out, because they know it's going to have a big effect on the market. So bear in mind that when you're looking at news events, you need to also consider their relevance and what's happening, the bigger picture in the market right now. Okay, in this lesson then, we looked at scheduled and unscheduled news events, and we looked at the effects of news. In the next lesson then, we're going to look at risk management.